The
Even
live
better.
the live stream. Damn it, Sheldon, clean your room, dude. The heck, man?
Sorry, you know, laundry is the killer.
No, it's not. Laziness is the killer.
I hate laundry with a passion.
I hate laziness. Last time I got rid of laziness, the laundry took care of itself.
True.
All right.
Very
Good
true.
morning. Happy Friday. Just us girls, huh? Good morning, Sheldon. Good
Sure is. Good
morning.
morning.
Good morning, Erica. Good morning, Brianna. Good morning, Jess. Good morning, Laura. Good morning, Serena. Good morning, Stacy. Good morning, Sam.
Morning, everybody.
His name on Zoom changes every week.
I
One
know. Hold on. Let me fix this.
now it's Borthwick. It's
Borthwick.
Sam, or sometimes it's Samuel. I've seen a Samuel a time or two.
Sometimes when I like am calling people, like calling clients, I change my name to spam, and then I tell them I'm not spam. So anyway, gets a laugh out of them.
Hello, my name is Spam. No, I would never.
No one likes spam calls, but some people like spam calls.
I don't get Sam calls anymore. He used to call
Well,
me.
you're gonna get spam calls this weekend.
He's I used to come. I'm gonna come down to Tucson and see you. We're gonna go to dinner. No, it never happened.
Like, I'm waiting for it to not be hot down there, which we're like 20 days away, so we should be
We're
good.
close. I mean, right now is when we're seeing like double digit temperatures dropping and dropping and dropping. And I'm like, the 10-day forecast shows 80s in the future. And I'm all right. Two things are gonna happen, right? We're gonna get a bunch of old drivers now. The blue
Yeah.
are coming back, and two, I can go outside finally.
And after the little bit of rain we got yesterday, it was beautiful. It was
Oh yeah.
so nice.
Oh nice.
We are officially in two outfit weather. Like in the morning you wear a hoodie and jeans. By afternoon you're like tank top and shorts. So that's Washington.
Yeah, I just start with tank top and shorts if I
You
can.
know? Yeah. That's usually
Yeah,
Skies out, thighs out, right?
that's a Tucson winter right there.
Tucson winter. Oh, it's cold this morning. I need a hoodie and then go outside 10 minutes later. Oh, I'm sweating my balls off. All right.
yeah.
Let's hear some wins, celebrations. What are you proud of? What are you doing great?
I'm
I
showing,
got a referral. Oh, go ahead, Jess.
How
sorry, I'm showing homes to that high dollar client for the first time, so I'm a little nervous, but
you're
I'm
trying
super
not to say
stoked.
it. You're trying not to say it. $1 million buyer. It's okay. Bro.
I'm trying to make it not be a big deal, but it's like I'm just super nervous, but I'm super
Not a big
excited
deal.
too.
It's not. Raise your hands if you know a millionaire. Everyone raise your hand. Right? They're just people. The difference between $1 million house and a $200,000 house is the price.
Yeah.
People are people. Take care of them. But I'm proud of you. Good job. All right, Caitlin. Referral what?
I got a referral yesterday, so that was good.
Woo.
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 Nice job.
My clients finally reached back out to me after their medical stuff, so we're gonna go see a home today for the first time in a while. These are the guys I wrote the first offer with ever.
Yeah. Charles Donnelly is not on the call this morning. Neither is Christina or James, so we can't even get connections there except through Jess. Jess can talk shit to him. But Charles Donnelly, who's been on our call a few times, wrote his first official offer yesterday.
Nice.
What? That's exciting.
Period.
So, there has been a lot of damn hatred in the world the last couple of days, so I want to just spread as much goodness as possible. So find those wins, celebrate those wins, amplify those wins, and go out and get more of them, right? That's what this is all about, is going out there and creating relationships with people so that we can do real estate with them. Not just buy and sell houses to get paid. It's about taking care of people. And that's why Sam shows up every Friday, except for a couple of them from here and there. He gets a couple of sick days. We'll give him that. But if you guys don't know Sam, this is Sam Borthwick. He's a good friend of mine. He's a lending partner of ours. He is working up in the Washington area, but he's licensed in Arizona. He knows Arizona, and he's awesome. Plus, he's bearded and beautiful. Can't get better than that.
Can't get better than that.
Can't get better than that. We have created Finance Friday so that you have a place to ask questions directly to a licensed professional. Because 4 out of the days of the week, you are not asking questions to a licensed professional. You are asking questions to a gorilla with a microphone. Sometimes we have good advice, sometimes we don't. But you know what? Sam always brings the value. But did you guys bring some questions for Sam?
Yep.
Let's see.
Sweet. Let's go.
So the referral that I got yesterday, he's saying that he was talking with his lender and that his wife's credit score is in the high sixes, but his is right now at a 580. So they had like some family troubles. They had some things going on. He had to use some credit cards. He said that he paid the credit cards off. He's waiting for the statements like this weekend for it to start reading onto his account. So his lender was saying that he wants to wait another week to do his hard pull and get him approved. Now then he asked me yesterday, he said, is it really to even wait? Like they found a house that they like. And yes, it's been on the market, and he's like, I mean, we could wait a week. But he wants to know the major difference. I told him that he needs to ask his lender because I don't know exactly what rates he has him locked into, but I figured I would ask this morning and see if it would be that much of a difference for waiting for his credit score to go up to wait to put in this offer.
Yeah. Okay. I love this. All right. So a couple things. The first one, let's start with the credit card piece and score and all that stuff. When you pay off a credit card or do something that positively impacts your credit score, mainly with paying off debt, every lender has the ability to do what's called a rapid rescore, where if he gets those statements and he provides those to me, I can pull credit, go directly to the bureaus and have them manually input that lower balance, which will increase the score like this. Maybe, lag time with the internet, 10 minutes, but we can do it. That's why it's called a rapid rescore. That's the first thing. So definitely have him look into that. The second part is going from, if he's paying off credit cards and he's at a 580 now, chances are he's going to be over 600, but not much over 600. And the difference between 580 and 600 from an interest rate perspective is not much. Basically, the way it works is there's like, unlike an auto loan where you can go from 6% if you have great credit to 29.9 if you have terrible credit, there's not a massive spread in mortgage. So you might go from 6% to 7.5, maybe 7.5. But there are things called LLPAs, loan level price adjustments on every client, right? So if you have excellent credit, you have a positive LLPA. If you have less than excellent credit, you have a negative LLPA. Going from 580 to 600, you might have a 1.5% impact, so negative hit LLPA, but that's only going to increase pricing. So the rate's not going to change necessarily, just the cost of the rate might change. Which if you get seller concessions or if you get, there's a lot of different ways to eat that up and make it. The way that AUS, so the automated underwriting system, I'm guessing is going FHA, had a 580 credit score.
VA.
VA, okay, even better. So with a VA loan, the AUS is not going to change his approvability going from 580 to 600. It will only impact pricing. So my vote is you don't wait. If you find the right house, do the rapid rescore. If it doesn't change anything, still get it locked in and pay the difference in price with the interest rate.
Okay, perfect. Thank you. And then the other question that I have was, and I don't know because I think that this is state to state. He is permanent and totally disabled. There are some states that will cover permanently and total disabled veterans property taxes. Does Arizona do that? I was looking into it and it was saying there was an application, but does anyone know if that's the only way to go about that?
From what I've seen, most times you do have to go through the application. It happens after close. We'd still have to close the loan, assuming he's paying or kind of that liability towards him or the impact. And then after close, he can apply and have that removed.
Oh, so he can't. We wouldn't know before we closed.
No, you know what? Actually, I want to 100% confirm that. But the last one I did, we have to do it after close.
Okay.
You're talking for property taxes, Kaylee?
Correct.
Yes.
Yeah, go to the county assessor site. Something about I know on one of the county websites it gives information about that, and there is information about what the process is for that. I think Sam's right. I think there's like an application or form or something that you have to do.
Have you ever done it
Okay.
before close, Christina?
No.
Yeah, I've always
I've
done
never
it.
had 100% disabled veteran, to be honest with you.
Okay. The most, all the ones that I've done have had right like before close, and then before they make that first payment, they have it removed. It's a pretty simple process, but from the lending side, we have to count that towards his debt to income ratio, so we have to qualify with it.
That might be a good
With it,
question for
okay.
title too, to find out,
Mhm.
like if there's something they can do during the transfer process. But
Okay,
there's
yeah.
other things too, Caitlin, that he just for, disabled vets, like in terms of their not having to pay their vehicle registration costs. There's several other things that they could look into to benefit from.
Okay, absolutely. Yeah, I will. Thank you. Yeah, he said that he qualifies with the property taxes now. But him and his wife want to they want to feel comfortable with their monthly payment. And he was saying that he would feel more comfortable if the property taxes weren't on there. So that was a big factor. But if it's not something that we can find out until after, then that is what it is. All right. Thank you. Appreciate it, everyone.
Yep. Go to the Pima County Assessors on the right-hand side. You'll see a downloads area. Highlight it and go to brochures. Good information. And then
Thank you.
the rest of you that aren't in Pima County, your county assessor's website probably has some information about it as well. So do some research, find the answers. Great questions, good support. I love Christina's, like, you can also do the vehicle registration, helps out there. Offsets their total debt load, because after all, it's about
Yeah.
affordability, not just total price.
Who else? That was a good one. Nice job, Caitlin.
I have a VA question, but I don't know if this is going to be fun for everyone. I have some buyers under contract right now. Do you remember I mentioned it last time, Sam, where we got creative and we put their dad on the loan to pursue the VA loan instead of the conventional that the daughter was going to do. So I just learned this yesterday and I love learning new things. So they in terms of like how a VA eligible person and a non-spouse, non-VA eligible person can both be on mortgage, but also what the implications are for how they take title. So I was just learning, and correct me if I'm wrong. So here's the situation: it's one father, two daughters, all older adults, right? That you can't have both daughters on the mortgage with him because you couldn't have three people. It could be the VA eligible person and one non-spouse, non-VA eligible person. But could we put, and this might be beyond your comfort level to speak to, but could we put the two daughters into a trust? And I was looking at VA regulations, I think that, or guidelines, I think if it's a revocable living trust, something like that, has to be a specific type of trust. Could we put them into a trust, have them be the second entity on there with the dad on title?
Short answer is yes. Long answer is obviously a bit longer, but in most cases, though, like 99% of the lenders out there will not close with a trust, with a VA specifically. So you'd have to do that after close.
Okay.
Which can be dicey, but short answer is 100% yes. If you're trying to add more than a second person who is a non-married or non-veteran, not married to the veteran, to title, the only way to do it is in a trust. So
Yeah, because
basically
you
veteran and trust buy the house together.
So then if you do it after the fact, so if we're doing it during, we would close it as, would one of them because here's the concern, the dad's in his 90s. The concern is something's going to happen to dad. We want to be able to still pay the mortgage, get information. Initially, I had suggested a third-party authorization form, but they obviously want rights to the property and all of that jazz. So would the first sister go on as a co-borrower or a co-signer?
So it doesn't, that part doesn't matter as much, but
Okay.
I think the one thing to consider and remember here, and you know, obviously this is a tough conversation, but with him being as old as he is, the simpler option to me would be when you know he eventually does pass, have the other daughter. So right now we have three people. One of them's a veteran. If he passes away, now you have two people that can assume that loan and just put her on through the assumption process and not even do the trust, because the trust can be a bit of red tape to get that all done, and some title companies won't do that after the fact, but that's the only way to do it. The assumption would be the easier path if and when he does pass away, to get the home in their names and keep paying that mortgage.
But one of them should start as like a
Correct.
co-borrower.
Yep.
Okay.
And then when he passes away, the one that's not would then assume it with the one that's on there.
And as far as like down payment amounts and things like that, I was reading about the 12.5%, which was originally what we had for their down payment because of a non-spouse co-borrower. But that also, so it's 12.5%. Is that because that's half essentially of the VA's coverage or guarantee of the, because they're covering only the veterans portion?
Correct. Yep. So anytime you're buying, and this is, you know, it's just kind of a wonky guideline that I don't know necessarily serves the veteran, at least not in any situation I've encountered. But if a veteran is buying with a non-married or non-veteran co-signer, it could be a spouse, doesn't matter, or sorry, non-spouse, they have to pay that. They have to pay the separate half or the second half of the funding fee. So the first half is covered by the veteran, the second half they'd have to cover out of pocket. Still, I mean, it's significantly less than what, you know, they would normally have to put down, but yeah.
Okay. So for protections for the third person, for the daughter, it's like, so we've got dad, first daughter, co-borrowers, one non-VA, non-spouse. Gotcha. Cover that down payment. As far as title goes, we cannot then have all three of them on title to start, or any
Yeah, you couldn't have all three of them on title. The only way to do it after the fact would be to
through the trust.
Exactly. Yeah, both of them are in trust together.
Otherwise, if they don't do that and dad passes away, we need to look at other, like, is there like a warranty deed or something that they could sign to, I don't know if you know about that.
That's it. I would check with title on that piece specifically, but
Yeah.
The so like FHA and VA are the two loans that are assumable. VA for family, I mean they make it a pretty, not a simple process, but it's definitely easier than like an assumable loan to just a random person. I had a pretty tragic story about a veteran who bought a house and ended up he passed away unexpectedly, and his daughter had to go through that process at the ripe age of 18 years old, and it was significantly less stressful than I thought it was gonna be for her. So they definitely walked her through that a little bit. I don't know if that was a one-off case, but it's not super challenging.
Yeah. Okay. Thank you.
Yeah. That was a good one though. Who else?
You guys are cranking this morning. All
Yeah.
you that are awake. You know what, guys? I have to pay Sam a lot of money to be here on Fridays. I want
So much.
her.
By the hour, by the minute, actually, because we're not
Actually,
here for an hour.
definitely by the minute.
Yeah.
By the minute.
When we talk about astronomical fees, guys, it is so much money you couldn't even count it.
Can't even. It's just, yeah.
Couldn't even count it.
A lot of zeros.
Lot of zeros.
Mostly zeros, actually. No, it's all, damn it, it's all zeros.
But this is where you get the opportunity to talk about it. So, okay, Sam, let's dive into the obvious. Where are you seeing rates? What are happening in the marketplace? Have you seen mortgage apps improve since last week?
No, so couple things. The first one, you know, obviously the chances of the Fed lowering rates at this meeting here in 3 days are super high. I wouldn't say it's 100%, but it's like 99.7. And this is like 10 years of data, more than that. When this happens, so when this happens and this happens, when the Fed lowers rates, makes that announcement, what do you think happens to rates the same day or the next day? They go up or down?
Up.
Cassie, I see your finger. Yeah. Rate spike. So the way that investors make their money is they do this thing called hedging. And basically what that is they buy low and sell high and vice versa. So if they know that rates coming down, they are going to start decreasing the rates, because as soon as the rates do come down, they're going to lose an entire hedge if they don't, if they're not set up correctly. So they're trying to get back to zero essentially. This past 2 weeks, we've seen rates consistently come down just across the board. As soon as they make that announcement, I would expect to see at least a 0.25% hike in interest rates across the board on the retail side. Obviously, there's not a one-to-one correlation between the Fed's rate and mortgage rates, but because of the relationship they do have, we will see that spike. It'll taper off and kind of normalize going into October. But for the second half of September, we will see higher rates. So if you have clients, like right now, I've got 15 refi applications that have to get in before the 15 because of that same situation. Get them in, get them locked before the rate spike. If you have clients that are shopping right now, I would say, making a decision sooner than later and getting locked would probably be good. But also, it's one of those things where it's trying to catch a falling knife. It's kind of like they're going to change a little bit, but getting the house is the most important piece. So don't wait too much on that. Mostly for refinances, you kind of want to time the rates. As far as mortgage applications, we have seen mortgage applications decrease week over week, which tells me that there's still a lot of volatility in the market and people are just unsure about making a big purchase. A lot of consumer sentiment is based on emotion. There's two different schools of thought. One that says, hey, those 923,000 jobs were fabricated, or they weren't actual jobs, it's just numbers to kind of make the economy look better. And there's other people that say, no, we actually didn't create 923,000 jobs in this most recent jobs report, and the economy's in trouble. So if you look at big purchases across the board, boats, airplanes, new vehicles, houses, all of them are down year over year. So it's kind of one of those things where, what is the most important piece? Do you want low rates or do you want a strong economy? What are your guys' thoughts on that? I mean, everyone's been asking for low rates for the past, 3 years, 2 years? Are low rates better than a strong economy? Because you can't have both at the same time. Where should interest rates be? And is housing, like the cost of housing or the increase we're seeing year over year nationwide, is that on par? Is that accurate? I think we're overpriced. This is just for discussion. There's no right answers. I'm just curious what your thoughts are.
I feel like a lot of houses right now are selling below value.
Below value or below list price?
Well, below like what their value is. I feel like
Below
if
list
rates,
price.
yeah, if the
That's
rates go up, I feel like the prices are gonna go up on the homes.
If what goes up, Jess?
If rates go down, then the prices of the house are gonna go up.
Yeah, we talk about that, right? Like if more buyers are in the market, then sellers are looking at it with options. If they're getting multiple offers, then it's going to drive the price up.
You are not wrong.
I would say they're below list price. They're selling below list, not below value, because then that is the value. That's what the market's willing to pay for it.
Yeah, that's the important thing to understand, is value is set by exactly what the market's willing to pay for. So, in 2020, when people were spending $100,000 over list price, that was the value of the home, unfortunately.
Yeah, it became the new value for sure.
Mhm.
For sure.
That's why I feel like I wasn't in the business at that time, but I feel like what we're seeing now, where sellers have this perception of like, we're losing all this money, it's like, it feels like it's actually just normalizing. Like that was insanity, and now we're just getting back to normal.
Yeah.
And that's the thing. A lot of people don't realize that we're just kind of leveling back out. There's the perception and reality. How many times have you heard this in your life that perception is reality? If you are not providing the perspective to your clients, both buyers and sellers, of the reality that we're in, they're going to run by their reality of what they've seen. And most people are ostriches. They've had their head in the sand. They don't know what's going on, or they don't really know how it's affecting them. I had a gentleman the other day I was talking to. He goes, "What do you mean? It's my house is probably going to sit on the market for 6 months?" Just the other day, my neighbor sold their house in like 60 minutes, it seemed like. Or what do you say? He goes, he lickety split and in a hurry or some shit like that. Older gentleman. And I was like, okay, can you give me the address of your neighbor's? I'll tell you exactly when it sold and how it sold for. It sold 4 years ago. I had another land deal. I was talking to another team yesterday, and I did valuation. I said the land's probably worth about 90 to 100,000. And that was me going back a year looking at what's sold in the area. And then she talks to the seller. He's like, "Oh, this lot sold across from my house. I want to sell it for the same amount." I was like, "Share me the address." I look it up. I'm like, he is right. It did sell for 190,000 4.5 years ago.
I mean, in their defense, I'm always saying the other day to my wife, and she's like, "That was literally 8 years ago." And I'm like, shit.
Me too. Honestly,
Yeah.
the other day is the other day is a 4-week spread. The other day is up to 4 weeks. A couple of days ago.
Yeah.
A couple of days ago could be up to 6 weeks. A while ago, you know, who knows? Yeah, I talked to Sam a while ago. Dude, he got married. He's been married for 12 years. Oh shit. So, but that's why we have to have these conversations, guys. It's not about giving you bad information to go out in the marketplace. It's about giving you critical thinking points that you can help the people you're working with think, right? I want you to make great decisions. And in order for you to make a good decision, I need to provide you the perspective of what the market looks like and how that matters to you. Oh, it's lower rates. Wait to buy a house until rates go down. Like we talked about the other day. Is that going to be a good thing? Maybe. We'll see. We don't know. But if rates come down, that means the economy's gone soft. And if the economy's gone soft, buyers are probably not going to want to put money out there. But you know what? If rates come down to 5.99, I think it'll still stir a bunch of buyers to come back in the market.
Yeah.
I really do. And it doesn't have to be 3% rates. It's just something that looks better than 7. And now we're at 6.25. It's not far off of 5.99. 5.99 is a stoking point. Because you've got new builds out there that are offering 3.99, 4.75. Hell, there was a down payment assistance on a new build that got you 5 3/4, 5.75. No money out of pocket. Just saying, there's always going to be a trade-off.
That's what I was going to say. Is we went out to a new build yesterday to show they have a down payment assistance, and asked her how it's been going, and she said, she says we've actually been pretty slow, and I mean their rates are without down payment assistance are 3.75, 3.99, 3.75, depending on which avenue you go, and then they do have the down payment assistance, just like Dan said, for the 5, which is probably what my client's going to be opting for, but it's out there.
You mean I don't have to come in with $20,000 cash? I can buy this house, and then I just have this pending doom over me for 3 years that I can't refinance out of?
Right. And I mean, those low rates are out there, and it's still not moving. So there's something bigger, more worry in the market other than just rates and price.
It's not a rate issue.
Nope.
That's the thing, guys. Get it out of your head. It's not a rate issue. It's a lifestyle issue. If people wanted the rates, there's rates out there. 2.99, 3.99, 4.9. It doesn't matter. The rates have been out there. The houses still aren't selling. It's a lifestyle issue. Why would I get rid of my 2.75% rate because you want a different lifestyle. You want a bigger house, a smaller house, a house in a different area. So this weekend, I really want you to find that perspective is what lifestyle are they trying to achieve?
That's one thing that I try to offer new buyers too is perspective of, hey, I bought my first house in 2008 at the lowest point after the bubble burst, and my interest rate was still 5.25. So if you're getting a new house, anything below that, you're doing good.
Yeah, and I bought one in 2009 for 4.75%. And in 2010, the rates came down. I refinanced it 4.25%. I was ecstatic. My payment went down $45 a month. Woo! But that's the thing, guys, is adding perspective, because if you're renting, how much is your interest rate?
Yeah.
100%. So, Sam, again, thank you as always. If you guys didn't check it, I put Sam's name and phone number in the chat. You can pull that out so you can have a contact that knows how to take care of clients. Give them a shot. Put them out there, right? Let's feed those that feed us. I know you have your favorite lender, but have they shown up to give value like Sam has? I don't think so.
I'm the favorite lender. I mean, let's, you know.
He is the favorite. He is my favorite. He's pretty. You should see the comments on his TikTok. They're nice. I bet his wife gets a good kick out of that too.
Oh, she loves it.
So, all right. 3, 2, 1, take the number out of the chat. If you don't have it already, I'm going to put it in our WhatsApp group chat. If you're not part of our WhatsApp group chat, I'm sorry. You're missing out. I'll talk to you.